Hi there, you're at the Hedera Wyckoff technical analysis session, and last week we talked about whether Hedera is just starting a price squeeze and whether it's going to make a big move before this session, but the big move hasn't happened yet. The squeeze is however still building up, but I believe the squeeze is like the microwave set with a timer, and it's about to be finished cooking where the price will start moving. So let's quickly take a look. One quick thing over here, you see white and red candles. So I've received a request. This works better for people with different color sensitivity. So why not make it easier for everybody, right? So the white candles are the ones that the price go up, and then the red candles stay as they are where the price comes down. So let's get started. So here, the big picture, even though last week was a red candle, but with C wicks on both sides, so basically the bulls and bears were combating around this little price range, and this week there's still a little bit less than 3 days left. As of this moment, it's finding support at a level where these two white candles back in the second week of July interchanged. So let me draw a line over here. This, I'm not sure you notice something similar. So this dashed line, if I change it to a line chart, you see this little mountain over here, right? So back in March all the way till June, we have something similar, basically a flat bottom hill, and we're having this again. So is it telling us that it's finding a flat bottom and where it's going to rebound towards the upwards? That's one of the possibility, even though we're having a little bit of downward movement. And also some indication over here, when the price surged, the volume were pretty high, and these few weeks the volume has come down to a level, you see it's like around 20 million, right? And over there it was like 100 million, so it's like 20% of where we were back in July. So there wasn't really a lot of people selling, especially few weeks back, like 4 or 5 weeks back, July 21st, the week, there was quite a bit of support, this long wick at the bottom. So much like the other ones we have over the past 3 weeks, there were long wicks, meaning a lot of people willing to support the price above this yellow key level. The yellow key level I'm talking about is the 0.25. Even though currently the price is below that level, there's still roughly close to 3 days left. The bulls would probably try to push the price upwards, but they don't have to really do it, because we have already seen it in the mid-July candle that it can go above this level without a problem. It's more like, is it able to go challenge the green key level and pass it all the way to show us at least the light blue level where the buying climax and the second test were. So, and eventually showing us an upthrust. That said, one more thing is the price currently is still far from the bottom edge of the upward channels. So this light blue box, let me extend it so we cover the wicks of the candles, is the upward channel since April, basically. Now here you see this triangle. This triangle finishes by mid-October. So from now till mid-October, if the price really stays below the yellow key zone, key level, it has to tell us either one or the other. So the first, it has to go above and continue the uptrend. Second, it falls outside of this upward channel, meaning the bottom edge of this channel would become a resistant line even if it comes up again. So there's one more resistance to break through other than the key levels. So very busy chart. Just to recap over here, mid-October if the price is still between the orange and the yellow key level, meaning 21 cents to 25 cents, that it has to decide which way it has to go. If not, if the price successfully climbed, like I mentioned in the beginning, that this flat bottom is an action or like a picture before a bullish move, then the timeline will be further down the line. That's mid-November. So by mid-November, another decision has to be made, whether it's going to still continue within this upward channel, or is it going to break above the green line and challenge the light blue like I talked about and show us potentially an upthrust. As of this moment, I'm keeping this LPSY over here with a question mark, because if it's really climbing up to an upthrust, this should happen somewhere here instead of here. If it is a negative scenario, that it comes down and show us a sign of weakness over here, then this one will stay. So currently that's the picture. It seems like, looking at the volume, that the upside has a higher potential than the downside, but we'll see. So as of this moment, I'll add say 60% chance over here, while this is a 40% chance. Let's see after looking at the daily chart whether we'll have to adjust this observation. So daily chart here, what we are seeing is a question we asked previously. Is the price going towards an upward of the distribution, or is it coming down for a sign of weakness? So in order not to make the chart too busy, there were multiple peaks. I just put in one LPSY tag over here. If I change it to the line chart, you can see there were multiple. So instead of putting 2, 3, 4 LPSYs, I just put one over here, and we all know those are LPSYs. And the upward trend support line has been broken for the daily chart. So this one we can take away, and like I said, so currently it's finding support at similar level. I can move the line down here. So basically we're at similar price level as the last sign of weakness back in beginning of the month. So whether or not it's going to bounce up to an upwards of the distribution, it's still waiting or pending to be seen. The volume themselves is pretty low over the past 2-ish weeks, and some people would say, is it developing an inverse cup and handle situation? And that's not a positive sign, right? So there are multiple signals that's telling us that something is going on. So if this is really coming down, one possibility is that it finds support at the orange key level and then try to rebound. So if that's the case, that means in the weekly chart, that's going to come down to somewhere near the bottom edge of the upward channel and then rebound. So that's still a positive scenario for the bulls if it really rebounds towards an upwards of the distribution in the daily chart, while in the weekly chart it means it's going to head towards the upwards over here. So get it? Scenario 1. Scenario 2, if it's really an inverse cup and handle, then it's going to, well, instead of like, it's still going to the orange level, but instead of rebounding, it doesn't, and breaks below the orange, then it will be the red that it's going to be the last defense line for the bulls. Why it is the last defense line over here, the red, meaning the price level is at 17 cents 50. Here, if it falls, the price falls below this key level, it's going to re-enter the accumulation zone. So back in here, actually, even if it's below the orange, that's already very close to the accumulation level back in March, April time. Just that the accumulation zone was much deeper back in June and July. So it really depends on how far it goes. If it comes down to somewhere between the orange and the red, it may already start accumulating here. So if it really accumulates in the daily chart instead of going to the upwards of the distribution, that still works for the weekly, because over here you see that both sign of weaknesses back in March and June were lower than the red key level. So the price can really come down to accumulate further before it goes to the upwards in the weekly chart. So from the bear's standpoint, it's not like loss of hope yet if the daily chart really comes down to accumulate. When it's really hopeless, no, I won't say hopeless, I would say probably you need a longer wait for the bulls, is when the price really comes lower than this white line over here, where the sign of weakness tag is. Then it re-enters the long-term playground zone. So from a longer timeline perspective, the price will come down to accumulate. When it happened back in 2022, it took over 2 years before we have this current distribution cycle. So hopefully, even if it comes down to somewhere near the red or below the red, it stays above the white, the top edge of the long-term playground zone. So that keeps the chance for the bulls to see one more wave. As of now, let's focus on this upward channel box. Hopefully it will stay within the box. So if I allow this box to show in the daily chart as well, let me take out this short-term one. So basically the price can come below the orange, but it has to rebound in order to stay within this upward channel. Otherwise, it's, like I said, going to challenge the red zone and may enter an accumulation for the daily at least. So finger crossed if you are in the bulls team, and don't be surprised if it really comes down to test the red or the orange key level, because those were where the sign of weaknesses were just a few months back. Let me show the chart again. Yep, over here. We see 3 sign of weaknesses over here at different stage just earlier this year. So no surprise if it comes down. As for the squeeze, it doesn't happen in the weekly, so I assume it's only a mild move in the weekly. But in the daily, since we talked about it last week, it's still within the squeeze and it's getting narrower and narrower. So a bigger price move in the daily chart is coming. So either it comes down over here to the bottom edge of the blue box, the upward channel, or the squeeze will go up to test the green line over here, the green key level. So looking at what's happening here, especially if it's like at the bottom edge or bottom half of the channel, it looks like, once again, the chance to shooting up may be higher. So that's why in the beginning I put in like 60% maybe towards the upside and 40% towards the downside. And just to add, don't expect it goes all the way to the light blue level. So when it shoots up, it may first challenge the green because it was already the level where the upthrust were back in late July. The most positive scenario is to go up here to the light blue key level that we talked about. That's 33 cents. So hope for the best, but always set your stop loss to prepare for the worst. So